For more on market volatility, meantime, and how tariffs and geopolitics factor in, let's bring in Marco Papic, BCA Research Chief Strategist. Marco, it's great to have you on, especially on a day like today. And that's exactly where I want to start, because I feel like I've been saying this a lot lately, but it continues to be the case. And that is international policy is getting ripped up and thrown out the window, decades worth of it, whether it's from a foreign policy standpoint or whether it is from a trade policy standpoint. Market certainly seems to be reacting to it now. Your thoughts on this moment we're in and what it means for the impact on financial markets, for investors, and for global economies?
You know, I think that today is a very interesting day. I mean, the last 4 or 6 weeks have been interesting in that if this is really all about tariffs, then why is the dollar falling? Why is the euro up 1.1, 1.2% in a single day, which is a pretty crazy move? I think tariffs are definitely a catalyst for a market sell-off. But I think what the markets have been basically telling you for the past month and a half is that they don't like a particular segment of the market, and that's U.S. assets. And, you know, if you talk to allocators 12 months ago and their hedge fund managers, everybody swore that once that trade war came, the dollar would surge. And certainly it did after the election of President Trump. But there were other reasons to cheer, you know, pro-growth policies, tax cuts, more tax cuts, even more tax cuts. And we're starting to hear from Congress that a lot of this stuff is not going to happen. Only the 2017 tax cuts will be extended. It's not really positive for growth. It's not new growth. And in addition to that, some of the geopolitical plays that are happening are actually starting to look like negotiations. And so you're seeing the rest of the world actually outperform the U.S. And I think that's fascinating.
Yeah, and to your point, you've seen some of the European averages, indices move to record highs. The German DAX, for example, defense stocks have been helping spur some of those moves we've seen in European equities. I mean, even just the details today about a $500 billion defense fund to help with Ukraine and to help bolster Europe, and Germany even basically saying that it's going to address its own regulations to be able to support that spending. Is that a place where you continue to invest right now? How do you think about it?
Yes, absolutely. At least I do. I've been very bullish in Europe since really December of last year, but even before that, I've expected the Trump presidency to be the end of U.S. exceptionalism, not necessarily because he does anything negative domestically for the U.S., but just that a lot of his policies will prove to be negotiation tactics. And today, something very important happened that I think Europeans will cheer tomorrow when they wake up. And it's that it's pretty clear that at the speech tonight, President Trump is going to announce, you know, that rare earth mineral deal with Ukraine. Now, why is that important? Is it really important for Ukraine or defense or NATO? No. The reason it's important is because it illustrates that what President Trump does is he pushes negotiations to the brink. Once they're at the brink, and it looks like it's all good, he actually pulls the carpet under the negotiations even further, and then he gets an even better deal, supposedly, from his counterparts. And the reason that the market cares about that is that that may very well be the same framework applied to the tariffs, which obviously are right now on the front pages of the news.